These are the Chapter 2 problems. Let's start out with practice exercise 2-1A. This is going over the rules of debit and credit and normal balances. State for each account whether it is likely to have a debit balance, a debit entry only, or B, credit entries only, or C, both debit and credit entries. Also indicate its normal balance. Number 1, accounts receivable. Accounts receivable is an asset. Assets normally have a debit balance. Accounts receivable could have both debit and credit entries. If accounts receivable is increasing, you would debit it. If it's decreasing, you would credit it. Number 2, commissions earned. Commissions earned is a revenue account. Revenue accounts normally have a credit balance, and you would only credit revenue. You would not normally debit revenue, because to credit revenue you would increase it. Number 3, notes payable. Notes payable is a liability. All liabilities normally have a credit balance, and you could either debit or credit notes payable. If you credited notes payable, you would be increasing it because all liabilities are increased with a credit. If you were debiting notes payable, you would be decreasing it. Number 4, Paul Howe, capital. Capital normally has a credit balance, and you would typically only credit the capital account to increase it. You would not normally be debiting a capital account. Number 5, rent revenue. This is just like number 2. Rent revenue is a type of revenue just like commissions earned is. So it would normally have a credit balance, and you would typically only credit rent revenue to increase it. And then finally, number 6, wages expense. All expenses normally have a debit balance, and you would only debit expense accounts, and that would increase the expense account. So in order to answer practice exercise 2-1A, you need to have memorized your rules of debit and credit. Okay, practice exercise 2-2A. This is on page 82 of your book. Prepare a journal entry for the purchase of office equipment on March the 4th for $27,150, paying $5,000 in cash and the remainder on account. You've got the date, March the 4th. We bought some office equipment. That's an asset, and if you want to increase an asset, you need to debit it. So the first thing you would do on the first line is debit office equipment. You would write it first, and its amount, $27,150. We paid $5,000 cash for that, so cash would be decreasing. Cash is decreased with a credit. So on the next line, you would indent and write cash, and then you would credit that for $5,000. The remainder of the purchase price was on account, so the other $22,150 we still owe for, and that's a liability. The specific account you would use is accounts payable, and you're increasing it with a credit balance. So your journal entry would be to debit office equipment $27,150, credit cash $5,000, and credit accounts payable $22,150. Practice exercise 2-3A. Prepare journal entry on September 6 for fees earned on account, $8,000. Notice we didn't collect these fees. They were earned on account. So an amount owed to us on account is called an account receivable. It is an asset, so it would be increased with a debit. So you would debit accounts receivable $8,000. The fees earned is a revenue account. You increase revenues with a credit, so you would credit fees earned. So the journal entry on September 6th is to debit accounts receivable for $8,000 and credit fees earned for $8,000. Practice exercise 2-4A. Prepare the journal entry on December 22nd for the withdrawal of $10,000 by Jason Von Pence for personal use. A withdrawal by the owner is called drawing. You use the owner's name, Jason Von Pence, and it's called drawing. Drawing is increased with a debit. So we would debit the drawing account for $10,000. He withdrew the cash from the company, so cash is decreasing. cash is an asset, and you decrease all assets with a credit. So the journal entry on December 22nd is to debit drawing $10,000 and credit cash $10,000. Okay, the next problem is problem 2-3A. Let's see what page that's on. That's on pages 91 and 92 of your book, and that's a rather long problem, but we're looking at the journal entries for a company, Intrex Designs, for the month of April. So first, in a journal, this is a journal where you record journal entries. They want you to record these transactions. And we may not have time to go over all of these, but we'll start these, and then you can look at the rest of these on your own. On April 1st, Kathleen transferred cash from a personal bank account to an account to be used for the business, $17,000. You know, you can memorize some of these journal entries. Anytime the owner puts money in the business, we're going to debit cash and credit the owner's capital account. Now, when you're recording the journal entries, notice this column called posting reference, and there's some numbers in that column. You don't put anything in that column until you post, and I'll talk about in just a minute how you post. But let's do a couple of journal entries first, and then we'll post those. On April 2nd, Kathleen paid the rent for the month, $3,400. Paying rent, you're going to debit rent expense for $3,400 because you increase expense accounts with a debit, and we paid it, so we're going to credit cash for $3,400. On April 6th, we purchased office equipment on account, $10,000. Debit the equipment because it increased by $10,000, and credit accounts payable $10,000. On April the 8th, purchased a used truck for $21,000, paying $2,000 cash and giving a note payable for the remainder. This is similar to that practice exercise we just did, so I'm not going to go over that one. Number 10, we purchased supplies for cash, $1,800. Both supplies and cash are assets. We're increasing the supplies account with a debit, and we're decreasing the cash account with a credit. On the 12th, we received cash for a job completed, $13,000. When you receive cash, you debit it to increase it, and fees earned is a revenue account, so we're going to credit it to increase it. On the 15th, we paid the annual premiums on property and casualty insurance, $1,800. When you pay an expense in advance, like you pay your insurance in advance, it's an asset because we haven't used it yet. So we're going to debit an asset account called prepaid insurance. It's going to increase by $1,800. We paid it, so we're going to credit cash $1,800. On the 23rd, we recorded some more jobs that we did, but these were on account. In other words, the customers did not pay us yet for the work that we've done, so that created an account receivable. Debit accounts receivable, $9,000. Credit fees earned, $9,000. Then on the 24th, received an invoice for truck expenses to be paid in April, $1,000. That's an expense which we want to increase, so you debit truck expense $1,000, and it's to be paid in April. So we're going to credit accounts payable to show that we owe for it. April the 29th, paid the utilities expense, $1,500. Debit utilities expense, credit cash. On the 29th, we paid some miscellaneous expenses. You do those the same way. On the 30th, we received cash from customers on account, $7,800. So we're receiving cash, so you would debit cash, and you would reduce accounts receivable. It's an asset, so to reduce it, you're going to credit accounts receivable. Paid the wages, that's an expense, so debit wages expense and credit cash, $4,000. Paid a creditor part of what we owed, $2,500, so debit accounts payable to reduce the liability, and credit cash, $2,500. And then finally, the owner withdrew some cash for personal use, $2,000, debit drawing, and credit cash. Now, we're getting ready to post the journal entries. They're posted to the ledger. And notice in your ledger, each account has a separate, not actually a separate page. It could be an entire page, or it could just be a section of a page. So notice there's one for cash, there's one for accounts receivable, there's one for supplies, prepaid insurance, and so each account has its own section. So I'm going back to the first journal entry. The first journal entry we made on April 1st was to debit cash $17,000 and credit capital $17,000. So to post, you take each line. So we're just going to take the debit to cash first, $17,000. And then you would go to the ledger and find the cash account. Notice it's account number 11.